Hi, I am Marius, the CEO of Trademate Sports, and today I'm going to explain why I prefer investing in value betting over the stock market. There are three main reasons for why I prefer investing in value betting over the stock market. Number one, having a quantifiable edge over the market. Number two, shorter investment cycles creates compound growth faster, which leads to number three, higher return on investment. Now, if you want to hear more about these three reasons, then stay tuned because I'm going to cover that next.
It is a scam when you don't allow everyone to operate on fair terms.
We are the Robin Hoods of sports betting. We take something back from the rich bookies and enable our customers to beat them instead. Number one, having a quantifiable edge. Beating the stock market is really difficult. You are competing against hedge funds who have billions under management and have armies of analysts and access to high quality data that you could only dream about, like being able to look at satellite photos of how many cars are parking outside of Walmart in order to predict how many sales they're going to have this quarter, and as a result, their stock price. It is very difficult to beat them, and doing stock picking profitable is in fact so difficult that the majority of actively managed funds don't manage to beat the market. How are we as retail investors who are not professionals and don't work with this every day supposed to be able to do it? The short answer is we don't, and a better solution for us is to put our money into an index fund. Index funds are great. They are very low cost, and essentially they are reflecting the market because an index fund consists of the stocks that make up a given market. And the traditional example of this is the S&P 500. Over the last 90 years, the full existence of the S&P 500, the average return on investment per year is close to 10%. So that is the benchmark that also the professionals have to beat in order to say that they are beating the market. Now, one area where betting is different compared to investing is that in betting it is a zero-sum game, while in investing productivity growth is leading to an overall increase in the market, and that's basically where that 10% growth is coming from. Now, what makes the 10% growth so powerful is that there's an effect called compound interest, which really starts to kick in after you've had your money locked up in an index fund for a lot of years. If you had invested 500 euros per month into an index fund tracking the S&P 500 over the last 30 years, you would have made 1 million euros in total. That is a lot of money. And the insane part about it is that 80% of the money would have been interest, and only 200% of that money would have been from the money you deposited. So that just shows how insanely powerful compound interest is, and I highly recommend playing around with a calculator for compound interest just to see how big of an effect different return on investments have, how much impact the time horizon, which is the most important factor, has on your returns. And it is absolutely mind-blowing, so it is something everyone should do. Now, the downside of the S&P 500 and index funds is that it takes a lot of time to make good money from them. If you had invested 1,000 euros into the S&P 500, it would have taken you 7 years to double your money to 2,000 euros. And that is a lot of time, and to make the million we were talking about 30 years. Shorter investment cycles is where value betting really shines, because a game of football only lasts for 90 minutes and then you either win or you lose. If you win, you get your money back plus the profits, and you can reinvest that money into another game. Now, because of this, you're able to make a lot of small investments that over time compound into some pretty mind-blowing results. And that was how I was able to make $9,000 doing value betting with Trademate Sports. In the stock market, you only have one price for Tesla. While in sports betting markets you have 100 different prices or opinions or predictions of what the probability is of Real Madrid beating Barcelona in a game of football. And because there are 100 different prices, they can't all be right, so a lot of them are wrong. And this means that inefficiencies exist in the betting markets which make them beatable. And this is what we have automated with Trademate, and this enables us to find value bets, which are essentially opportunities where the odds offered in the market is higher compared to the true odds of that event occurring. Like, for example, getting 2-in odds on Real Madrid to beat Barcelona at one bookmaker, while the rest of the market is only offering 1.8 in odds. Now you can measure the edge you have when doing value betting by comparing the odds at the time you place the bet with the odds at the time the game started. Because at this point, the bookmaker has all the information about what everyone has bet on, the lineups, and everything is out, and the game is just about to start. So at this given point in time, the odds is the most efficient. So this enables you to get a quantifiable metric for how large your edge is against the market. Now, the second thing to look out for is that quite often after you place a value bet, you will notice that the bookmaker reduces their odds. And these odds drops is essentially the bookmaker admitting that they priced the odds incorrectly, and that they then have moved the odds to a more accurate level, which is lower. And when you see this, it's great because it confirms that you placed a value bet. Now, there are some factors that you should consider when doing both value betting and investing. And the first is the investment amount. If you have 100,000 euros that you want to invest in upwards, then you're probably better off in the stock market because you are going to have a hard time betting with such large amounts in the betting markets. But if you were like me and starting out with a couple of thousand euros, then value betting is an area where it is possible to achieve much higher multiples on your money in a much shorter time frame. And that is what makes it so much more attractive. Now, there are two main downsides to value betting, and the first is volatility. There is risk involved with value betting, and we have videos explaining this, so I recommend that you check those out. I will leave a link in the description below this video. But an advantage of value betting is that every game you bet on is independent from the other games, which is not the case in the stock market, where the stocks are correlated to each other. So if the market falls in general, it will also drag down the majority of the stocks. And finally, why not do both? If I can get 1% interest in one bank and I can get 10% interest in the other bank, but there is a limit to how much money I can deposit into the 10% ROI bank, then I will max out the amount I can invest into that bank before putting the rest of my money into the other bank, giving the 1%. And it's kind of the same thing with value betting and investing. I want to max out as much money as possible doing value betting, and then the rest I put into an index fund in the stock market. In my particular case, where I started out with $3,000, if I had put that into the stock market, it would have taken me a lot of time to get to the $9,000 that I made doing value betting. But after I made a profit, I could take all of that money and put it into the stock market, and I would have a much higher starting point, which will enable me to get those sweet compound growth returns a lot faster. So to sum it up, there are three main reasons for why I prefer investing in value betting over the stock market. And the first is that I have a quantifiable edge over the market. The second is that there are faster investment cycles, which leads to compound growth being achieved faster, which in turn has led to me getting a much higher return on investment in a much shorter time frame doing value betting than what I would have been able to do in the stock market. And that's it, guys. If you like this video, then give us a thumbs up. If you want us to make more videos like this, then write so in the comment section below. And if you have any questions, write them as well. We are happy to answer those. And if you have not done so already, then make sure you subscribe to the Trademate Sports YouTube channel to get more videos like this. If you want to try out Trademate Sports or try out OddsHero, our match betting product, then you can do so. There are free trials available for both, and so you don't really have to risk any money. You can just paper trade in the beginning and see that it works in practice. And also there's a lot of free articles on our blog, so make sure that you read those first before you start the free trial, so you know what you're getting into. And finally, we are not investment advisors, we are not professionals. This should not be considered as investment advice, and please always be careful with your money. Never risk more than you are willing and able to lose. And yeah, life is risky, guys, so be careful.